Good evening, everyone, and welcome to Crypto Pulse Weekly. As usual, this week we'll go through our normal routine of examining the markets via the market updates. We'll then go through the crypto vital signs, explaining what's going on technically on the price action of majors like Bitcoin and Ethereum. And then we'll have a short knowledge sharing session before taking questions and answers. Again, as you would have observed today, we're back to last weekend's levels, practically based on the fact that we did have what you call a CME gap at the beginning of the week. And the CME gap is almost like a self-fulfilling prophecy for gaps generally. So I'll explain what a gap is when we get to the crypto drip. It's usually a technical scenario where a particular price range is not traded. It happens a lot in the stock market and in the forex markets. So let's assume that the price closed at $10 for a particular currency pair at the end of Friday, and it opens at $12 on Monday morning or Sunday night. What it means is you have a gap of $2. So because of that gap, and because that particular price range was not traded for that period of time, traders are always interested in using beats at those levels, just because the price just tends to fall to those levels. Everybody's watching out for gaps. So like I was telling somebody, I've been watching out for this gap since the beginning of the week, and just this morning when I gave up on the gap was when the gap eventually gets filled. So we're back to close to last week's level generally in the price of Bitcoin. I will show you the gap when we get to the technical analysis. So the gap's being filled now because the price has traded back to the closing price of last Friday. CME is Chicago Mercantile Exchange, the biggest one of the biggest institutional exchanges in the world. Started trading Bitcoin futures in 2017, 2018. And has always, traded Bitcoin futures since then. Probably responsible for more than half of the dumps that you have on the price of Bitcoin, because that's where the big institutions get the chance to short the price of Bitcoin with very huge amounts of money. So people generally say, well, the crash was due to the new COVID variant. There's a lot of ambiguity in the new COVID variant, so I don't think really that's the issue. When there's a crash or when there's a dump, either in the equities market, the forex market, or in the crypto markets, market makers usually try to track the narrative media to explain the crash, but usually many times it's just profit taking, or just the market maker dumping on everybody else. So that's where we are. I'll talk more about Bitcoin shortly, and where I think we will see ourselves in the few weeks to come. In terms of regulation, we see the U.S. Senate questioning one of the Bitcoin mining companies in the U.S., partly because of the crypto regulation that was inserted in the infrastructure bill, and partly because, as I said last week, 2 weeks ago, some senators are already planning to challenge that bill and repeal the crypto parts of the infrastructure bill. In another news, the South Korean guys postponed their crypto tax, so they're voting to legislate postponement on crypto tax. Well, it's understandable because it's still very new territory, and there's very little clarity, even amongst people already in the industry. There's very little clarity on what actually constitutes gains, because you need to be able to distinguish between what constitutes equity, what constitutes assets, what constitutes money. Now, those are still very fuzzy areas across board by definitions right now, because on the one hand, you can say that Bitcoin is a peer-to-peer currency, but on the other hand, places like US already recognize Bitcoin as a property. So what kind of, you can't levy, cash taxes on properties because properties are subject to property or capital gains tax. So there's a lot of ambiguity and uncertainty around how to navigate legislation and regulation of this thing. So because of that, the the governments are usually very cautious. The US government have been trying to, play catch up things. They found out that, China was already ahead in terms of mining, and many legislators actually already hold Bitcoin. And then to cap it up, you have people like MicroStrategy that are institutional stakeholders, if you will, in accumulation of Bitcoin. I mean, I say it openly every time that Michael Saylor is my mentor in cryptocurrency because, as far as I'm concerned, he's one of the few people like myself that have, some background in science, exposure to finance, and understanding of business. So when you have that kind of intersect, you tend to understand. And I mean, it's not being proud. It's just that you tend to get a lot more exposure to more dimensions on a particular matter. So when people like Taylor are talking, for instance, it starts from physics and start breaking down how, Bitcoin is consuming the monetary energy in the world and converting it into something else and generating value from it. So it's inevitable that we will have regulation, but I think it will be precautious at this time to try to legislate what people don't understand. So I agree with the South Korean regulator trying to defer, taxation, because if you start imposing taxation on something you don't even know so much about, then you will have crippled that industry before it kicks off. So, and to be honest, I personally respect South Koreans because they're like Japanese on overdrive. They're much more mellow, but they're really quite advanced. If you read about their technologies and you find out that many of the things that we consider sci-fi are already in operation in South Korea. So I usually look at South Korea for a number of things when it comes to technological advancement. They don't make so much noise, but they're quite up there. So in terms of sentiments, having said all of this, short term, yes, we have a bearish sentiment, but I think that we're going to have a significant move in the price of Bitcoin in the next 48 to 72 hours. Someone was telling me that, do you mean a significant move downwards? Or, I don't think we'll have further room downwards anymore. I think if we're going downwards, probably like 1 or 2K down to 50K, and that's it. But I doubt that. I think we'll probably just stay at 53K where we were last week before we see another move upward. As you see from the chart, we're still actually trading in the range as it seems right now. So I think even though we're short-term bearish, I think the overall long-term sentiment of still in the bull run is still very much in place. As I said, yes, we've dropped down to retest 54K, but bear in mind that exchange balances are still sitting at 3-year lows, and we're constantly having outflows. Apart from the week before the last, when we witnessed some, I think about 30,000 plus Bitcoin being moved into exchanges, there's been constant outflow of Bitcoin from the exchanges. It's significant to note, though, that the outflows from the exchanges are not going into the spot market. And okay, I think I'm going to explain that at the end of today. So the knowledge sharing I wanted to do today was about the market and what's going on in the markets. But I'll explain that at the end of today. So the Bitcoin going into the exchanges are not sitting in the spot market. They're going into the futures and the derivatives market. And I'll explain the implication of that when I talk about the different kind of markets at the end of today, because what it then means is that those Bitcoins are more like being used for betting. I don't want to use the word betting, but they're being used for speculation. In the sense that they're not sitting on the stock market. So it's not like the owners of those Bitcoin want to sell them for spot. They want to sell them to make more Bitcoins. So I'll come back to that later. But that's the state of Bitcoin, so to say. Um, but I'll come back to to Bitcoin when we start talking about the charts. A very interesting story that I found today was a purchase that was made on the metaverse. I mean, I'm sure you've been hearing about metaverse, Facebook changed their name to Meta and all that. An interesting purchase that was made on metaverse this week, and it was a purchase of a yacht, a super yacht NFT on the Sandbox metaverse, and the person who bought it paid 149 Ethereum for that NFT. Now, I'm not even going to try to decompose, what the metaverse is and, position of that. I don't want to show the original picture because it's not as beautiful as this super yacht picture that I'm showing you. But my focus is on the purchase value, which is 149 Ethereum. Ethereum is currently trading at 4,300 thereabouts. Currently, as we speak, that's the price of Ethereum. So somebody bought an NFT for 149. For the mathematicians in the house, the as they say, the is equal to that 149 by an NFT. It's not, I mean, it's not a new thing. There was a guy that bought an NFT for about $22 million actually it was this year. Of course, it's an OG, meaning it's been in crypto for a while, so it's one of those Ethereum and Bitcoin whales. But what I'm saying is that before our eyes, the metaverse is developing and evolving. Just the same way before our eyes, the internet was evolving, and like they say in Nigeria, like play, like play, like play, like play. The internet took over all our work. So from carrying files and folders in the days of my parents, now all our work is on the laptop. As a matter of fact, most of your work you can do remotely. If you're in IT like myself, you can do most of your work remotely unless you just want to, meet face to face. But since the era of COVID, you find out that most of the work is now being done online, Teams, Skype, Zoom, and all the video conferencing applications. So what's happened, use Michael Saylor's word, is that the internet has consumed the energy, the physical energy we're using to carry the folders and files around and store our documents in filing cabinets. All of that energy has been subsumed into the internet. So now we don't need to do that anymore. Put that on our computers. Even beyond that, so organizations have even gone beyond putting that on the computer or having a server in your office. People are now putting their stuff in the cloud, meaning the servers are no longer in our offices. The servers are somewhere we don't even have any idea. I mean, if you're not in IT or in infrastructure, you probably not know where the servers for your company is. And half of your applications are what you call SaaS, software as a service, meaning you basically creating the data on the vendor's platform. A very good example, one of the projects I'm running on the site is Microsoft 360 Online. With that application now, you can literally create everything you want to create in terms of documents online, store it online. Anytime you get online, you can access it from any device, from anywhere, essentially. So that nature of work and that cycle of work that was in existence before the 1990s has been completely taken over by the internet. So the reason I'm bringing this news up is to tell you that, well, now we've started with the metaverse, which many people classify as part of Web 3.0, meaning the third version of the web. And little by little, what we'll be seeing is that things in the metaverse will start gaining value. So in the same way, the data of an individual or the data of an organization has become a proper commodity. It's an asset now. Even though accountants do not have any way to put that on the balance sheet yet, but I'm sure in the future, accountants will have to account for the data of the organization and the balance sheet value of such data. So really, what's happening is we're beginning to have accrual of data, accrual of value in an alternate world, which is the metaverse. And metaverse is not just one place. There can be many metaverses simultaneously. So right now, this one that somebody bought one for 49 Ethereum yacht in, it's a sandbox metaverse, which is on sand. Little explains why sand is pumping. Same thing happened to Mana about a few weeks ago. So as we continue to go on, what we will see is there will be value accreting to many of these alternative, as I call them, alternate realities. Uh, and it's only going to get bigger. And I think we're still in the early stages, to be honest. When I look back at the way the internet started and the adoption curve, even though adoption curve for crypto is like 10 times faster than that of the internet, I think we're still in the early stages. But it's the news like this put things in perspective on how things are evolving. In the future, the rich people or the rich men and women of the future will not be people with the blinks. It will be people with the biggest NFTs. Don't quote me. it's not a prophecy. Well, you can say it's a prophecy, but really, that's exactly what will happen. It won't be, your biggest flex won't be your super yacht that you have today, or a Boeing 737 private jet, or some very cute pad somewhere on the island, in the Caribbean. It will be some huge NFT that people can walk in and experience and all that. So very instructive to how we want to pass value down to the next generation. That's my takeaway from that news. Yes, I want to talk about BTC getting ready for a major move. The person did not get a physical yacht in exchange. He got an NFT in exchange for the 149 Ethereum. Um, the there is usually a major move of Bitcoin in December, especially when bull run. And to be honest, we've been waiting for this major move for 4 weeks now. And I was having a discussion with somebody this morning, and it was like, the person was complaining that the market is so manipulated. I said, yes, that's how market makers make money. And I was telling the person later today, even I, forsook some of my analysis. So I did some analysis at the beginning of the week, but sort of plotted where the market should be. Then this morning, I jumped my analysis and said, the market is not going this way. And come 4 o'clock, the market is at exactly where I thought it would be yesterday. So this tells me that, one, the analysis that I'm making of the market is actually accurate. Two, that the market is following a particular rhythm that seems to, even though it's not matching with previous cycle, it's still rhyming. Just like, so if we go by that, and I can't break down the details on this call, that will take forever. If we go by that, I think in the next 48 to 72 hours, we will see a significant leg up. I strongly, yesterday I was in doubt, but seeing the correction I've seen today, I think we might be in for a significant leg up in the next 24 to 72 hours. I just saw that you mentioned that for people who are waiting to buy the dip, well, this might be your last dip for a while. It's not financial advice, of course, but it's just for assessment of what's on the market. Everybody that wears trainers knows this logo, or well, most people knows this logo. Everybody in the age group currently listening to this broadcast know this logo of Adidas. Adidas, Adidas as a sportswear company. I think I first knew Adidas for the jerseys that they make for different clubs. Then I started seeing them on sneakers. I wasn't a rich boy growing up, so I didn't have Adidas sneakers. But what I'm saying is Adidas is a known brand. They're very strong in sportswear. Right now, Adidas is getting into metaverse and NFTs, and they have about 3 concurrent partnerships as we speak. If you join some of those stuff, you can actually, yeah, that reminds me. I was going to sign up for those. So you could sign up and you could win some NFTs. You participated in some Twitter events that they were doing. I'm going to look for that stuff. Let me write it down. I actually forgot about it. I was laughing about it, but you never can tell. The NFT might be worthless today, and you might find out that it can be costing you tens of thousands of dollars in the future. So they were giving out NFTs for some stuff, and they also had they had their logo on as an NFT. But I think it's a good thing to check them out. I'm going to check it out after today's call. Now that I've mentioned it, I think it's something to look out for. Another thing is Airta is planning to launch a multi-smart chain platform. So for people who have been around in crypto, Airta is one of those smart contracts platforms, just like Cardano, Ethereum, Polkadot, Solana, Avalanche, Luna. So all these guys are Ethereum contenders. And basically, the idea is to create something that rivals Ethereum. Are they going to succeed? I don't know. Some of them will succeed, some of them won't. A good example is looking at the top 20 coins 2013. There wasn't even Ethereum to it. That's the funny part. There was no Ethereum in top 20 in 2013. Flipped 2017, Ethereum was number 2. The same way, if you look at 2020, 2021 top 20, some of the coins you are seeing there now were nowhere. In fact, they were not in existence, not just nowhere. They were not in existence in, so this is top 20 now. Yeah, so some of these coins like Luna, Polkadot, Avalanche, Shiba, Crypto.com, Matic, Wrap Bitcoin, Uniswap, and Algorand, they all were not around in 2017. So in the same way, many of the smart contracts platforms are trying to rival Ethereum. Some of them will succeed, some of them will fail. But it's always important to keep an eye out. I don't hold any data. As a matter of fact, I don't think I want to hold any smart contracts until the end of. Reason being that I think we're probably about anywhere between 8 weeks to 20 weeks to the end of this bull run. The bull run officially, mathematically, should have finished at the end of November. But there are so many things that have not happened. One, Bitcoin has not increased the number of digits from 4 to 5. 2, there's no blow off top. Blow off top means the price just goes parabolic. Price goes up vertically, and then stays there, comes down, then attempts to go back up again, then the sell-off begins. So we've not seen that at all. Some people will say, how about the price went to 70 or almost 70K? That's not a blow off top. I can show you on I can show you on the charts that a blow up top is very classic. You cannot mix it. I mean, you cannot mix it because it's very dramatic, and it keeps going on and on until it's over. So we've not had those conditions fulfilled. So it's really really not it's not the end yet. And if you remember, I think I've mentioned it twice or 3 times this year that there is a concurrent theory that we may actually not have the 4-year cycle anymore. And there are there's some institutional talking heads that also posited that there's a possibility that we don't actually have the 4-year cycle. Well, you can say that because now you have a lot of institutional money, but I don't think so, and I'll explain why. The Bitcoin whales and the market makers who have the bulk of the Bitcoin stash, this 4-year cycle actually provides them opportunity to profit from their Bitcoin stash and to acquire more. It's funny, right? But that's what happens. So when the price goes from a position of extreme bearishness, meaning the price is so low, like during a COVID panic that happened last year, and during that time they accumulated at $4,500 per Bitcoin. And then just imagine Bitcoin goes to 300K or even 268 or 262K. How many multiples have they sold between March last year and maybe March or February 2022? That's like 4 in 20 is 5. That's over 50x. So if they sell off at that point in time, all the ones they accumulated from from 2020 March. They've made more than 50x on their lots. And if the market crashes back on the back of the 4-year cycle being over, the market will usually go back to the what you call the average price of the cycle before. So the least we can have Bitcoin go back, even if there was a catastrophe, is probably 21K or 22K. And I mean, there have to be a COVID level or more than a COVID level global catastrophe for that to happen again. But again, that's how the whales play the market. So they need the blow off top to exit their positions in the market. Otherwise, they will hold the bag for another 4 years before they have the opportunity to sell. So in a concerted effort, they usually come together, knowingly or unknowingly, and pump the price to a level where they can comfortably sell without appearing to dump on the market till the end of the bull run. So while many people believe that we might not have, a bear market, there will be a sell-off, and it will be, I don't want to use the word fatal, but it will be bloody because crash will be heavy. And at the time that it starts to happen, people will have been carried away with the level of gains that will have happened in the price. And I've been saying this for a while now that it's inevitable. They have to sell. So naturally, at some point, the market will take a correction. Whether that correction is going to last, the 2.5 years that we had in the bear market is a different story. We might just have 6 months or 1 year this time. It might just be that we could have a blow off top end of Q1 or beginning of Q2, and then the market goes into a period of somnolence for 6 months till the end of 2022, and everybody's like, oh, is Bitcoin dead, or is the market dead? And the market makers are silently till you have the next cycle in 2024, 2025. So this is just one to watch out for. I'll be looking to acquire IOTA at the beginning of the bear market. I'm not sure there is a relationship between IOTA and IOTX. I need to find out. I don't think so. I think IOTA is IOTA is a proper ecosystem, while IOTX is a Binance Smart Chains stuff. I don't know what's. I know I see IOTX, but I don't really pay attention to it. So in another news, so this news is actually one of the reasons why many people are postulating that we might have a super cycle, as I was explaining earlier. So Riot Blockchain is a big Bitcoin mining company in the US. They are one of those companies that have increased their mining capacity on the backdrop of miners exit China, Bitcoin miners exiting. So in this space, this year, I would say Riot Blockchain has almost grown double. If you are interested in stocks, when the stock market crashes, because it's still going to crash, and consider buying stocks for Riot Blockchain. I might consider it too, but I don't usually do stock. I might consider it for a change, some diversification purposes, maybe later. But I think they're a good stock to hold. I think it's trading around $20-something at the moment. They just acquired all the SS Metron, basically just to increase their mining capabilities. If I had a lot of cash or a lot of capital right now, I will actually be interested in mining. And you never can say, if anybody that hears this podcast has a stash of cash that's sitting somewhere, please get in touch. We can start a very good mining, and be what's it called? Also have sustainability, be ESG compliant. That's the word I was looking for. We can have a mining company and be ESG compliant. There's so much sunshine in the West African country that the cost of mining will actually not too cheap, honestly. A place like West Africa or Nigeria, the cost of generating this power too cheap. Because all you need to do is the sunk cost of getting the miners, getting the panels, setting up the generating dynamic sun, you will not exhaust. Will not exhaust. If you have enough solar panels and a very big plant, you will not exhaust your power in any 24-hour cycle. And because the sun is always out for 12 hours, anyways, in West Africa, you have abundant power. Why is this important? And why am I talking about these miners? You see, one of the reasons why the price of Bitcoin dumps every 4 years is a lot of capital investment, yes. But what I'm saying is, if you know people that, or anybody knows people in government or state governments, I think it's something that people in Nigeria should be looking at. I don't know why I always talk about Nigeria, but just it just cuts my heart when I see this kind of opportunities. And it's a very great opportunity. All you need to do is set up the infrastructure, connect the node, get the right computers, connect to the network. Once your computer is set up to the network and you're probably connected, you will mine Bitcoin like every other miner that is connected to the Bitcoin network. And I mean, you get your share. It's a lot of investment, but when you compare the capex with the long-term gains, not only from the Bitcoins that you are getting, but the fact that the Bitcoin that you are getting is a massive leverage, actually. The operating leverage is so huge. And let me explain the mechanics for people who are in business and finance. The concept of the super cycle supposes that Bitcoin miners no longer have to sell their Bitcoin. If they don't have to sell their Bitcoin, then there will be no drop in price, meaning demand will keep soaring, whereas supply is stalled. When demand keeps soaring and supply is stalled, automatically price has to respond. Before now, whilst most of the miners were in Asia, in China, for them to cover their operating costs, they needed to sell Bitcoin. But now that you're having a lot of miner migration into the United States and into the Western countries, they might never need to sell. They might never need to sell their Bitcoin because all they have to do is to say, you know what, this is our proof of Bitcoin. Borrow us dollar against the Bitcoin. They can then borrow against their Bitcoin, use that for operating costs and even additional, and then just the fraction of the gains that they're getting from their Bitcoin balance sheets will sort out their interest and repayments. So whilst Chinelo is a big investment, what I'm saying is I look at this through the eyes of business. It's one of the best business investments in the world. The leverage is to infinity. That's just the truth. Because unless the monetary structure in the world changes, this business is continuously profitable. Even if there's a catastrophe, as long as the US government is printing money, this business will be profitable because all they have to do is to make sure that the operating costs they have debts to cover their operating costs, and from the gains that they're getting from their Bitcoin, just appreciating in value. They don't even need to sell so much. Just their Bitcoin appreciating in value. They can be netting off their interest and netting off their debts. Or they can even raise more debt against that debt. I don't want to get into debt of corporate finance, but let's leave that there. But what I'm saying is, I think it's probably going to be one of the best business models, Bitcoin infrastructure, in the near term. And then I think I mentioned this about a few months ago as well, that people using geothermal energy and oil rigs trying to adapt their energy waste for Bitcoin mining. It's one of the most efficient use of energy on the surface of the earth. So people like this, as time goes on, we never need to sell their Bitcoin. They will all just borrow against it, then net it off against their operating income. Anyways, let's leave that. It's just some of those things that bother my mind at night. That doesn't make me sleep. Let's leave that. But yeah, it's a sign that Bitcoin mining is growing in the West, and it's suggestive that we might actually have a super cycle. Coin review today is by Economy. I don't usually do coin reviews for new coins, but this one caught my attention because one, it seemed to launch across boards, they just launched barely how many days ago. But by the time it launched, let me look for the charts. By the time it launched, so this was Coinbase. By the time it launched on Coinbase, that launched on about 10 other exchanges on the same day. So for me, I'm taking note of them. I'm not buying. I'm not buying now. I'm taking note of them because the price has gone as high as 24 and has crashed down to 6. I think that's because there is no data to operate by from a technical standpoint. It's just to wait and see the accumulation level. Right now, it's still dipping. Probably will get to $4 or $5 and then starts going sideways. At that point, it's a good opportunity to buy or just wait for it. So what are they doing? They're doing Web3 applications, and they raise some serious money. Really. That's why they're able to on different exchanges. So I'm on the watch out for them to see. I mean, they launched on Coinbase. Launched Coinbase. Hold on a second. Let me look. They launched on Coinbase, FTX, Bybit, Wobi, and OKEX at the same time on the same day, and about 4 other smaller exchanges. So it looks like they have a very strong team and they have money, just like the Solana people. So I'm on the watch out for them. Anyways, not for the immediate, in the near term. In terms of vital sign, what's happened to crypto economy? Yes, we can see that despite the dip, we gained $7 billion across board. Of course, that $7 billion, I can trace it. It's inside what we call total two, which is the, the the market capitalization of the crypto market, excluding Bitcoin. So that means altcoin markets. Um, I said last week, I think it was last week. Yeah, we were here. Yeah, I think it was last week. It was last week that I was talking about um, the 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 altcoin markets not breaking down below the top levels that we had in September and in May. So what has happened is now we've broken above those levels, quite all right. But what we're now doing is to flip those levels from being resistance to support. So it used to be the ceiling, now it's the floor. And as you can see, not broken into, so this blue line that I drew from last week, we've not really broken out of, broken into an arm below it since last week. So this suggests to me that we're gearing up, among other things, suggests to me that we're gearing up for another test. I think altcoins, the near future, sitting at altcoins, now features, and it means Bitcoin, or well, let's say the overall market cap, at about, you know, that will almost take going to, and from last week as well, the total market cap that I was saying, I said was trading in this range, still stayed in the range, was sitting between 2.4 and 2. I think we'll see a break upwards, most likely, as I said, in the next few days. Why? Because you have what you call inverted head and shoulder. It's a pattern, it's a technical pattern on that shows that price is about to reverse. It's stronger when it's a proper head and shoulder that is happening at the top of the market when the market is overbought. But it's also a strong pattern when market has banking well, and then you have that inverted pattern. So you have this inverted pattern. It's sitting on the major demand and supply zone. Technically speaking, I think we're due for another leg. In terms of before I go to these charts, let me know control myself. So that's where we will not really change so much. Dominance seems to have come down a bit, but not so much. In terms of time, where yeah, we are more in fear now than we were last week. As I said, this sentiment indicator is one of the accurate indicators of the market. Actually, if anyone will wait and enter the market when below 30, the person will always be profitable because usually when it's below 30, 20 and 30 is when the market most profitable to get in, because what it means is that everybody is scared to get in at that point in time. So anyone getting it at that point in time probably profit from the upside. It's just like when the price of a stock or a commodity crashes and people get in on the crash. You know, the big boys getting on the crash, the retailers run away on the crash. So again, 31 is a very, very good sign that the market is primed for an upside, essentially. So people ask again, you know, in terms of overall psychology, where are we on the market? Well, some people will say we are here, meaning the market has reached euphoria. So we are here now, and you know, we're we're not aware that the market has already peaked. I think we're here. We're back to believe that, you know, this bull run is not over yet. It still has some fuel in the tank. And I can show you so many data that shows that one, for instance, each bull run has been longer than the other in terms of overall length of days from the halving, the end of the bull cycle. So if we were to use exact calculation, as I said earlier on this call, the bull run should have finished mid-November. Mid-November, mid-November was nothing but spectacular about me. And like I said, when the bull run finishes, you will notice two things will have happened. One, the price will have been silly crazy. Two, there will be so much noise about Bitcoin, like, you know, the Uber driver, your shoemaker, everybody will be talking about, even, you know, the security guard for so in Nigeria, everybody will be talking about. So that's when you know that, yeah, reached it. So we didn't see any of that in November. That tells me we're not there yet. If the kind of euphoria we had, which was not even significant, the one we had in May, if we had it in November, then I'll probably have said, yeah, maybe, you know, really and truly, the cycle was over. But as it is, I don't think so. I think as I said, I think we have anywhere between the next 8 to 20 weeks before this bull run is expired. Um, on the charts, just to run through what we're seeing. So here we are. Yeah, I think we're gonna test this bottom once more, or attempt to test it. This was the bottom from last week. This is a 6-hour chart. Yeah, I had the 6-hour chart on because there was a technical pattern for falling wedge. Actually, that wedge is really original wedge. That's it, which was falling. Um, Bitcoin broke out of it. Now it's breaking back. I think it's not sustainable in terms of how low this will go. One, because there's a Fibonacci line. I remember it. Okay, so there's a 50% Fibonacci line here. And Fibonacci, uh, as they say, when it touches 50%, you expect that next leg up takes you double the length. So from the laws of wave theory, when you have an impulse move going up, you should at least have a dropper, make it a valid impulse move. So this impulse move going up, that might, yeah, that, that shows it better. So this impulse move now from here, from 4,000 to 69,000, impulse moves, correction, right, around 50. I don't expect the price to, even if it touches or breaks below 50, I don't think it's going to, before it continues its journey. And that journey, at least, at least 72K on the caps, based on what's showing up. So right now, at the edge of that, that's why I have to Yeah, I was looking at 6 hours. Yeah, because the original trending wedge, broken out of that wedge, coming back to test it as a support. If this um, doesn't break, then I expect the bounce. Ethereum, yeah, Ethereum is in a much stronger position. Even the dump last week not get Ethereum to close below 4. Ethereum has strongly up, and even right now, is the room. So yeah, worst case scenario, maybe 4,000 before it starts popping up. I don't think it will get there. Before it starts popping up again, gives us possible target of about 5,200 in near term. So this was the analysis. The analysis I was talking about yes, earlier in the week, and I was expecting it to be out. When the market was missing out direction. In terms of yeah, so I was explaining the CME gap. So this is the CME chart. CME is Chicago Mercantile Exchange. They only operate on Sunday night to Friday evening. And because of that, when the market moves during the weekend, many a times it creates a gap, which is what you can see here. So this is the CME gap that we're talking about. I brought it to the hourly chart so that I can actually see the gap, the actual gap. The gap was from this candle. This candle was the last hourly candle, which is on the 26th of November, and it closed at 445. With this move down that we just saw, it actually sealed up the gap completely. There is no gap now because this gap that we see here has now been traded by this move downward. Gaps are like attraction, they're like what do you call it now? Light to bees or light to flies. Anytime there's a gap, all traders and even algorithms are always teaching to take positions and put pending orders there. So people that are shorting the market, they can afford to cut down all the way to this open. There is a gap there. And because we didn't really move, it's even more attractive. So it was inevitable that that gap was going to get filled. Now that the gap's been filled, but down to Basel and power, I think traders will be happy, generally speaking, and they'll be happy to let go. The last thing I wanted to say on today's chat, not usually something I show, the Ethereum Bitcoin chart. And the reason I show this is because of like um I don't have enough money to buy, because you can buy fractions of $10. But that's not even the point. Yeah, that's pure return on investments. Ethereum is a better play than Bitcoin any day. Why? One, the smaller cap. The market capitalization of Ethereum is still smaller than the market capitalization of, what do I mean? Let me show you. Let me show it to you. This is Bitcoin. Bitcoin is 54,000, Ethereum is 4,000. Market capitalization, now almost half a billion. Bitcoin is 1 billion. Now, because Ethereum is still smaller than Bitcoin, there's a lot of headroom for Ethereum to. Secondly, Ethereum actually has more utility currently than Bitcoin. What do I mean? All the smart contracts that we're using in by NFT, everything we're doing, most of them are sitting on Ethereum smart contracts. Ethereum smart contracts are scripts and bunches of codes that are sitting in the blockchain. So the same way we've managed to create money or value that is transferable across the internet through the blockchain technology, Ethereum has provided that platform for us to transfer, but much more than value, transfer ecosystems. So Ethereum has created a platform where you can do so many things that we never thought was possible. So think of Bitcoin as gold and Ethereum as petroleum. That's the best analogy I can come up with. So Ethereum is actually, in ubiquity, Ethereum is actually huge. So I tell people that if you feel, you Ethereum is actually still strong. And what I'm seeing here is this is a correction of about how many days of gain? 3 days of gain. But let me go to the great hill. Sorry. Of the, so I'll try to do this next week. I'm spending too much time already. What I wanted to show you was actually to show you the Bitcoin charts and the Ethereum chart on the weekly scale. And all of a sudden, you will notice that Ethereum and Bitcoin are seemingly following the same pattern. So Ethereum right now seems looking like it's following having a Bitcoin to, yeah, 17 pattern. So let me just one. Yeah, let's do this. Just take a moment to try to picture this image now. This one, two, and look at Ethereum currently. It's almost building up, just the same way this was building up. So this hump here, yeah, this one here was the first one we had. So it's almost like Ethereum is following a very strange manner, following the is following the playbook of Bitcoin from previous cycle. So I think Ethereum right has anywhere between um if Bitcoin does get to 100, then definitely that part. So it's just instructive to take note of that and for people to shout investment, you're better off with your money in it. That's what I'm saying. Not a financial advice, it's just an observation based on behavior of the price historically and based on of this case. I mean, some venture capitalist guys like Raul Powell believe that Ethereum is going to flip Bitcoin in value. I can't speak to that. What I can say is definitely Ethereum is going to outperform in terms of pure ROI. Ethereum is still going to outperform Bitcoin this year. I mean, this bull run. And I mean, if you think about it, give me a second. I wanted to check something. The price of Ethereum in March, for instance. So Ethereum's price, just have a look at this. At the day COVID crash hit the most, Ethereum price lowest was $89.25. If we used the recent peak as our frame of reference, which is 4,862, my math is not so excellent, or divided that by 89, I'm sure you get something like 50x already, almost 50x. If you do the same thing with Bitcoin from the same date, so Bitcoin 2020 March, yeah, which was 3,000 at the bottom, 3,891. Or let's say, so let's round that one to $90, and let's round up the recent high to 5K. That means Ethereum has done, yeah, almost 20K. Let's round this up to 4,000 and then pick 70K. So do the maths. I'm not a mathematician, but what I'm saying is Ethereum will always outperform Bitcoin in terms of pure ROI. So in essence, if you are, yeah, it's okay to buy Bitcoin. I'm not saying don't buy Bitcoin. What I'm just saying is that make much more from your Ethereum than your Bitcoin. That's just the essence of all that noise I just. Anyway, so that's it for today. I want to talk about, yeah, I want to talk about the types of markets. Just touch on it, just a brief. So, um, in cryptocurrency world, there are different markets. So there is the exchanges, which we all know, the centralized exchanges. Then there is what's called decentralized exchanges, which are exchanges that are based on the blockchain directly. Centralized exchanges are based on centralized databases. So they are not on the blockchain, they are on the company's web servers. Now, those web servers are databases like any other web server. Of course, they will have requisite security, but they operate at two levels. Unfortunately, I don't have any diagram pattern that can show you, but they operate at two levels. One, they are operating at the database level, which is they're operating like a normal website. Then two, they're operating at the blockchain level. There's a reconciliation layer in between them that reconciles what's happening at the blockchain level with what's happening at the database level. Sorry, I'm being too technical about this, but think about it like bread sandwich. You have two slices of bread, and in between them, you have anything you want: meat patty, cheese, lettuce, depending on your preference. Anything in between is the reconciliation layer. Now, those two layers interface with different aspects. So the database layer for most centralized exchanges is where you carry out all your money between your wallet and do P2P. Other user and buy and sell, you have other book, all that. All that is happening on a database, meaning there's a central physical server somewhere carrying off set of servers because there might be replicated servers, something called replicated servers IT, where like 4 or 5 servers share the same information. It's pretty much like the blockchain, but it's not the same mechanism. So you can have, because those servers sort of mirror themselves, such that if one of them fails, another one can pick up the other one's function. So they have that, and then they have the blockchain layer. In the blockchain layer, what's actually happening is that the exchanges themselves have wallets for each cryptocurrency that is listed on that exchange. So when you transfer from an outside exchange to your wallet on a particular exchange, what they are doing is they are transferring to the exchange's wallet. But the exchange's wallet has an additional hash or address hash that specifies that that money is going to you. So the wallet that the exchange gives you already has the surname of the exchange. Let me use that. Let me, for simplicity's purposes, the exchange surname is already on that address, so that when the money is sent to the exchange, when it gets to the exchange's own computer or programs can read the address and say, oh, this money belongs to Samuel, or this money belongs to David, or this money belongs to Kelvin, and then push that value into your exchange balance. So when you open your account, with that value, your exchange balance, what's happening is that the actual transaction happened on the blockchain. So let's say I want to send money from my crypto.com account or my Bitcoin or my Swissborg account to Binance. What happens is when I send that money out of Swissborg, it goes out of Swissborg's wallet, essentially on the blockchain, Binance's wallet. But because I've already specified the recipient address, and the recipient address has the quote unquote surname of Binance. So when Binance gets it, it just looks at the first name and say, oh, it belongs to Amy. So it sends it to my wallet, then it reflects in my wallet. So that's the layers on which, I mean, technically speaking, that's how the exchanges operate. Now, within the database layer, the layer of the sandwich, now, you now have different markets. And what do I mean by these markets? You have the spot markets, you have the futures markets, the liquidity markets, you have the earn, you have the yield, depending on which exchange you're using. Now, these markets are for various purposes. The spot market is for sports, just like you're buying spot forex. Meaning, I want to buy $500, and on the spot market, $500 selling at 1 to 5 naira. So that's a spot. So the exchanges provide that functionality. They also provide what you call the futures or the derivatives markets, in which case I'm not really interested in buying the $500. I just want to speculate on the price of dollar versus naira. So they allow me to speculate and say, okay, I put down my money. If it goes up, I make a gain. If it comes down, I make a loss. And of course, depending on the various market components on the exchanges, you have various leverages where the exchange will borrow you money to make a bet against the price of the market. How and why are these things important? Well, they are important because the markets are interconnected. You say, what do you mean? The markets are interconnected because each of the exchanges usually connect to other exchanges through what we call APIs. Or the meaning of that acronym is Application Programming Interface. Meaning APIs allow you to connect from one application to the other on different sites. So what this API does is that it allows each exchange to take price feeds. What do I mean price feeds? They are the price at which a particular currency or a pair is sold on another exchange. It allows them to take price feed from other exchanges and based on that, adjust their own price feeds. So if for some crazy reason now, somebody goes on the spot exchange on Binance and buys 10,000 Bitcoin spots, the price of Bitcoin is going to jump in 1 hour. Maybe like it can jump like $2,000 immediately, because what the person has done is the person has consumed almost everything on the other book market. That spike is going to, I don't want to use the word ricochet, it's going to echo into the other markets. Why? Because the other markets take price feeds from each other. So when that price goes up like that, all the other markets and market makers have their systems automatically adjusting to that price. That is why it's so easy for markets generally, even across the world, to collapse, because they are interconnected one way or the other. And so this is just, I'm just talking crypto to that. If somebody makes a huge buy order that jumps the market, so let's say the same way the market is going down now, somebody makes a huge buy order that jumps the market and the market goes up significantly, what will happen is the price will react across board. And because there are people that are leveraged market, it will amplify the response, so to say. The response will be more than what you have if it was just sports, which is where I'm going with this analogy. So the market's response is made larger because there are interconnected markets that are affecting the behavior of the price. So as the price hits a particular level on the spot market, derivative markets also responds to it. And as a result, you have price jump across board. So it's important to understand these dynamics, because that's usually why markets react the way they react, and why the price can suddenly pump, and suddenly dump. It's just because these markets are intricately connected one another. I hope that I've been able to convince and not with that explanation. That will be all for now. Please feel free to unmute your mic if you're on Zoom. If you're on Instagram, you can type in your question out. I'll take them. Happy to let you go. Okay, so what's the plan for Zenith? I'm going to wait to see what the value be at the end of the bull run, because I want to be sure that I'm selling for maximum value. So I'm going to defer that decision essentially till when the bull run is pretty much done, and then make a judgment whether I'm going to sell at that point in time or I'm going to keep it for longer. Like I said, I mean, there's some coins that sometimes just pays you to hold them and just wait, because selling them prematurely can mean missing out on bigger opportunities for that same token.
Sorry, Dr. Timmy, what coin was that? What coin did you mention before I ask my question?
Zenith. Somebody asked a question about Zenith token.
Oh, Zenith. Okay. Thank you again, as usual, for the insights and the knowledge building. I think my question is around the altcoins that use Ethereum platform to drive their own mining. The likes of all I call their name now from do I remember some of the keywords I wanted to talk about? So give me a second. I mean, basically all the altcoins that sort of use, like the VVS Finance, Solana and the rest, Sandbox. I mean, how would you say in terms of the portfolio management between that and Ethereum itself?
Okay, so if you remember something I said, that was last week, when I said that there are differences between two coins. A coin, technically speaking, has own blockchain. That's the definition of a coin. Really. A coin in crypto terms means the asset has its own blockchain. That's why it's a coin. If it doesn't have its own blockchain and it's sitting on another blockchain, it is regarded as a token. So many of the Ethereum tokens that you're mentioning do not have their own blockchain, so they are regarded as tokens. Let me look for a second. Where's this? I'll show you what I mean. So Bitcoin, for instance, it's a coin. Its own coin. You can see it says mineable SA256 store of value, blah blah blah. Ethereum, it's a coin. Ethereum, you can see, has where is that? So it has mineable proof of work, smart contract. Binance Coin, again, coin, because it has its own smart contract and it sits on its own blockchain. And you can see Explorer Binance. It's so far. I mean, it's important to know that Binance started out as an Ethereum token, just so you know. Same thing with many other tokens before they to their permanent site, as we say in it, before they became their own. Before they became their own, essentially. So, let me look for one that's, yes, Shiba is very good. So Shiba is a token. That does it not? So you can see Ethereum. Shiba, the token, is an Ethereum sitting on Ethereum blockchain. As a result, Shiba, the token, as you can see, token. It's already mentioned there that it's a token because it does not own the blockchain on which it operates. Other ones that own their own blockchain, they are usually referred to as coins. So it's important to make that delineation. So Solana, for instance, again, has its own coin because it has its own blockchain. You can see Explorer. Anywhere you see coin, you must see Explorer because it means it has its own blockchain where the transactions are happening. Now, many of the tokens that we have right now are one blockchain or the other. Of course, I mean, at the end of the run, there's no other thing than to sell them because their value or the other tied to the residents, what do you call it now? The residents or the, I don't want to use the landlord, or the proprietary blockchain that they're sitting on. That's what determines their value. So because of that, we want to make sure that if you're holding any token or coin, it is something that it has value. It's something that maybe owns its own blockchain, or it has serious value that is looking like it's going to be, something that has its own blockchain in the future. So in which case you want to make sure that you have as much of it as possible. So that's what I would say. I'm not going to hold anything that's not a coin, except I know that it has serious use cases and it's going somewhere. That would be my submission, I think.
Thank you. That was very, very insightful. But can I ask one more question as a follow-up?
Sure, go ahead.
Is there any specific signals that indicate a token becoming a potential coin?
They will usually talk about it in their what do you call it now? They usually talk about in their white paper or in their communications to the outside world to say that okay, in so and so we're going to do so and so, and then can easily see from their track record whether they are matching up to what is said. So the indicators are so like if you I don't know when you joined, or that was before you joined, I was saying that people like Solana that they've raised a lot of money. I don't know if you heard me when I said that they've raised a lot of money. What does that mean? Raising a lot of money means they have a lot of money to develop their ecosystem, even during the bear market. So they're likely to stay around and still keep going, even though when my market goes into bear market. They have already, paying a lot of capital up front right now. So those ones you can tell that if they were a token, for instance, they will be a good buy. They already showed signs. They raised money. So, but now they already are their own. How do I say it? They're already on their own land, on their permanent sites. They have their own blockchain, so they stand alone coin. So they're good to go. And they, of course, they also have use cases. So if people start building smart contracts, then it increases their liquidity and then their utilization and demand, which then drives increase in price.
Okay, thank you very much.
I understand they'll be having on Zenith. Yeah, good evening, Albert.
Mine is on explanation of especially NFT. That what you just showed, somebody has bought an NFT, use so much Ethereum to buy NFT. This NFT, the other time also, I heard one of the leaders on different platforms that he also did NFT, which was sold for so much. So those who buy the NFT, what benefit did they get from, or what did they use the NFT for?
Non-fungible token, as the word implies, they are unique, meaning they are not fungible. They are not exactly tradable. So it's like buying work of art. Let me use that for instance, or buying watches. Because they are they are unique in their own right. They sort of command. So if somebody has, I'm not a watch collection, but if somebody has, a rare Rolex watch, for instance, they might say, okay, only 12 of that Rolex was ever made. Because of that, even if the person bought 1,000, time he bought it, now bought 500,000, just as an example. So that kind of scarcity commands a gain of value. So it makes that item gain value. So what NFTs are doing is digitalizing collector's items. That's the best way to put it. NFTs are helping to digitalize collector's items by making them into digital formats, which are unique and cannot be replicated. And that is why they are so expensive, because you can't replicate them, you can't get another kind of that particular NFT again. So the person who is going to sell it is at liberty to sell at the to the highest bidder, because because they know that you can't get it anywhere else. There is no way you're going to to see a replica of that that NFT, and that's why NFTs are very expensive. Not that the pixels are going to benefit anybody, but because the unique store of value and can't replicate it. So simply because you can't replicate it, it makes it difficult for anybody to put a actual price on that digital asset. If you joined earlier on when I was talking about the way work is now, the energy of work has been moved from physical to digital. It's the same way storage of value is now being moved from from physical to digital. It started with the internet, where we thought, we're just going to use the internet to transmit physical information to digital information. But now, with the advent of e-commerce and now currencies are blockchain, we've completely secured that transition of moving value from the physical world into the digital world. So NFTs provide a placeholder to do to give you those kind of things. So like I told you, there's somebody that bought an NFT in the middle of the year for $22 million. And that NFT, he says he's going to place it in the metaverse where people can come and look at it and pay they can pay in the metaverse, come and enjoy, that's the way he put it, come and enjoy that NFT. That particular NFT is a very unique because the person that did it collated all the paintings they've ever done in their life to one giant picture. So that picture, when you are looking at it as a whole, it looks like a paper mosaic or paper mache of some sort. But in each pixel of that picture is an individually drawn digital picture that has been pressed to allow the whole NFT to fit into a page. So usually looking at it, we don't not see anything. If you're looking at it from the surface, it looks like nonsense. Really and truly, best work of art that is making the owner able to put it away somewhere on the digital space. And of course, you can sell it for any amount he wants to sell it. I hope that explains it. Any other question? The person asking about Zenith, by the way, Zenith has Alvin every February, if I remember very well. I think that's all the questions that's coming in for today. Do have a lovely weekend, everyone, and see you again next week, same time, same place, and have a lovely weekend and happy New Month, everybody.
You too, Doctor. Thank you so much. God bless you.
Bye.
Thank you very much, Doctor.
Thank you so much. Good night.